Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, May the 9th. The year's 2023. Let's talk trading. Big versus small with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, I read something, I think it was either yesterday or the day before, and it talked about basically there's 5 things that can happen after you enter a trade and exit the trade. You can win big, you can win small, you can break even, you can lose small, or you could lose big. Now, the thing is, winning big, that could make your day, week, month, year, life. Then again, losing big could end your trading career.
Forever and ever.
Yeah.
Yeah, and that, to be honest with you, for me, that's the one that always goes and drives a stake of fear in my heart. It's like, you could do something stupid, you could do something that you just, what were you thinking, And it's funny because whenever I I can't recall exactly when, because I think every trader is, in their trading journey to the point where they become successful, profitable, however you want to phrase that. They do win, they do lose big at some point in time. Usually most people 2 or 3 times before, it soaks in a little bit. Maybe I shouldn't do that. But, it's, I can't recall exactly, what caused those particular catastrophic events, but I'm going to go and add a 6th thing here just to go mess things up a little bit. And that is sort of like, lose medium, where it's not a small loss and it's not a career ending, type of loss, but something in between. And I find when I take those losses, it's usually because I tried to win big. Instead of, excuse me, I had a small profit there and, I should have taken it off the table and gotten out. When I look at the chart, especially when you look back at it, it's like, you silly fool, why didn't you go and just take it off the table? It's like screaming at you, get out now, get out,
Yeah.
and just take your small little profit, and next thing you know, it turns around, but you're so into, well, it got there the last time, it's got to get there again, and no, it doesn't. It goes down more and more and more, and next thing you know, you're losing medium, and so you're not just taking a small loss. When I say a small loss, I'm talking about, somewhere between, somewhere around whatever spread is times 2 or 3. That's generally what I consider to be a small loss. So if your spread is like a 0.6 or a 0.7 or something like that, then we're talking about, a small loss of, up to 3 pips or something like that. That's just life, that's just going to happen. But medium, now also, now you're taking a 10 pip or maybe even a 15 pip, loss, and I'm basing that. See, for me, it's easy to do it that way because I always, and TRO, you can attest to this, I always trade the exact same amount on every trade. I have a lot size that I always trade. So it's easy for me to think that way. But, taking a 10 or 15 pip loss, I don't consider that big because it doesn't go and take you out of the game. But it's big enough to go and cause you some problems in terms of your mental health. It's going to affect the way that you take the trade the next time you take a trade. It's going to affect on whether or not you even take a trade, maybe, and then you wind up missing some good opportunities. And I'm not saying that you could have come back on that 10 or 15 pip loss that day, but certainly you could have, come back in the next 2 or 3 days. At least that's my thought on it.
Yeah, and it was funny because before we started the call, what was it, about an hour or so, we just looked at the charts and looked at the charts. Did you take a trade? No. Did I take a trade? No. It was just like there wasn't anything. And then finally you said, oh, what the heck? What did you say? I went long and I'll probably get burned or something like that.
Yeah, exactly. And it's sort of like, and the reason why I took the trade because the chart said take a trade, okay? And so I took the trade, and everything on it, using my rule set for taking a trade, it was a good trade to take, and I took it. But the reason why I said that we're probably going to get burned on this is just because the way the market's moving. We're finally up to 55 pip range for the day right now, and it's Eastern U.S. time, which is GMT -4 for those in other parts of the world. It's right now about to turn to 9 o'clock a.m. And it was just, at this point in time, we should be sitting like at 80 or 90 pips, range for the day. But if you look back over the last 4 or 5 days, it's just not what the market's doing. The market has slowed down for some reason. I don't know why, but it has. And what's really been interesting is that here on the east coast of the United States, the 6 o'clock, 7 o'clock hours usually is some really nice hours where you're getting 30, 40 pips on those hours. And during those hours, we've been getting 10, 9, 16, and so literally, a quarter to a third of what you normally would expect to see. And then maybe a little bit later on the day, it goes and picks up a little bit, but it's just been strange trading. And that was my fear with that trade. It's sort of like, okay, normally it's a good place. It's a kind of a, what I was basing it on was a flip-flop box, a state change, at a line, was the 00, and I was expecting it to, on a normal day, I would expect it to go up there and pop up and get to, 05 at least. And didn't do it, but I took the chance because, that's what the trade said to do.
Yes, that's like one of my trades that I've been taking a lot over the past month or so is I've been taking the H4 breakout because I just noticed that if you look at it when it breaks, it usually gives up some pips. So in fact, I'm kind of kicking myself because I was working, loading up the computer for this video, and then price had jumped all the way back up to the 00, only to come right back down through that previous H4 low, which was about 96. And if you'd just seen a few seconds before the top of the hour, we were 10 pips below that. That would have been another nice trade. And talk about small wins. There was this one trade where I took it, and what had happened was it came down through that 96 right here, and then stopped. And then I saw it and I looked at it, and at the time that was a 3-ball. And I was up 0.1, and I just went and just said, I'm out. And Wall's like, what? What are you doing? I go, well, I looked at the trade, and it was like they already had 3, bear candles in a row, and it was hesitating there, and I saw a 3-ball, and it was just like, you know what? Just don't push your luck. And so it only would have run against me 3 pips, but I would have been in all that. And then I did get a second opportunity where I grabbed another pip or 2 on the second time. Once again, I probably got out slightly early, but I looked and it was like, hey, you know what? There's 3 bear candles in a row again. I'm not going to push my luck. And so I'm happy to take those small wins in the sense that I don't know what the next tick's going to bring. So it's like, get out, and hey, if they happen to bring out a big pot of shrimp and I'm already stepped out of that cafeteria line, oh well.
My belly's already full. And that's how you have to sometimes look at it, and it's tough sometimes, and it can really play with you. But, and it's stuff like right now, at the top of the hour, which happened about a minute and a half or so ago.
2 minutes now.
2 minutes now.
Hey, you got a long trade setting up right here at 87.
Right. You actually had a long trade at, 87.3, and you could have picked up 0.8. There's nothing there. But that's the trading that's been there for today, and it's just, that's that idea. Do you go after, at least for me, what would have happened was after commission and after spread and everything else would have been 1 point. And just for me, I'm just sort of like, no, I'm not going to take that trade. It just didn't look very good to me. I saw lots of compression going on, and yet which is usually a good thing, but this compression is just like so small, and at the time when that trade set up, price was just sitting there. It wasn't even moving. Now it seems to be moving a little bit, at least on my charts, it's moving a little bit. But when it was setting up for me when we were on the video, well, I got a rule. I don't like to go and take trades, although I do it
Yeah.
while we're on the video. But it just didn't. It doesn't look like a good opportunity. And sometimes you just have to go and say, "Hey, that's what I'm going to do."
Yeah, and just for you traders, I said it looked like there was a long here at this 87.6 flip-flop box, but the reason maybe not to have taken that trade, hindsight, but there was a one ball there, and I don't like trading against any of the semaphores. It's like I'll just wait for clear sailing.
Yeah, and that's probably the one place where I'm probably a little bit more risky than you, because I don't mind taking a trade when there's a one ball there. I won't do a 2 or a 3 ball, but I always look at one balls as an opportunity to get to a 2 ball.
Yeah, and so here it's coming back. So I mean, your stop loss shouldn't have been threatened there, and there you go.
Yeah, who knows where it would have gone to. See, where my entry would have been, my original entry would have been up right now about a pip and a half or so.
Right.
And, right now I'd be probably shooting to get to 90. That would be my goal, to get to 90. But, the way it's moving today, in normal market, I'd want 90. But the way it's moving today, I'd take my 1 pip and just call it, and just say, hey, that's it. It's sort of like, to give you traders how ridiculous this is. I've got 17 pips for the day right now, and I did that on 13 trades. That's just horrific, in terms of what normally you're able to do.
Right. So I think there was a trader that was asking something about, trading at 3 levels ZZ. So if you look here, it pretty much tells you what your bias is, what to do, the range between semaphores, and the distance. So so right here, you only have 3.8 pips between semaphores. You're 2.9 off of that bottom semaphore. Or is it off the top? I guess it's off the top because that was the last semaphore. So it's just one of these things where you have to decide what's the minimum semaphore range I want to trade, because usually in these semaphores we're looking for these reversals as opposed to looking to break out.
Right. And just so traders know, when I used to trade the semaphores, I always look for a minimum of 10 pips between top and bottom before I go trading. And I call that trading into the middle. Basically, it turns into range trading is what it really is.
Right.
So I always look for a minimum of 10 pips, because you want enough room for your commission, enough room for your spread, and enough room for the thing to, it's sort of like, you were talking about that idea before we got on this video about, seesaw. If it goes up 3, it's going to come down 3, up 3, down 3. Well, and the market tends to move that way, but at the same time, there's, from time to time, you lose momentum. And so what happens is you may go up 3, but then you only go down 2, because the child on the other end sticks their feet out to go and stop it, and they stop it a little bit early.
Yeah.
And that's trading.
Yeah, and you know what? The fastest 15 minutes in trading is just about over. So, fellow traders, take a look at your trades, and if you're taking those small wins, you might make sure you're only taking small losses too, because you don't want a big loss to wipe you out, because it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.